Good day, guys. It's been a long time. And let's put a little update of what happened lately. Why didn't we post any episodes of the True Trader podcast? To be really honest with you, we've been busy. Dave and I have been busy in our personal life, in our professional life. And I've been busy trading. I've been focusing a lot in my new strategy, which I will share you today. And we also have been thinking of how we could make the True Traders channel a bit more lively without us thinking that we want to do this like in a consistent basis, in the meaning that we are traders and we are also entrepreneurs. We have a life, not like some YouTubers who have nothing else to do, right? We actually trade, it's our job and it takes time, okay? I also stopped the Patreon because, I don't want to become a Patreon YouTuber all my life. It was just for 1.5 years, streaming every day. I needed also a little break. And now I started some mentoring with Michael that you know from a previous episode of podcast. And this took a lot of time. It's very interesting. We do quite a lot of things. So it was a lot of work. But now the small update is finished. I will explain you what is going to happen with the True Traders. We're still going to do podcasts, right? But I'm not very a leak-ass person. I don't like to run after people to join a podcast. So I will only invite and have guests with Dave that where it's easy to communicate and we have a true feelings of genuinity and that we feel things rolls, So it will come. But in between, we will do then videos again. But as I didn't want to make a focus on just me, like before, where it was only me talking and it's only Pablo this, Pablo pull back this, how we do that. We had the great idea, because Dave now is a funded trader after the mentoring that we did. So I'm very glad for him, very happy. He also started to trade his own fund. We decided with him and Michael, because you really liked Michael in the last episode and he's a mentor for the True Traders, so it's great, to make videos together. So here we are 3 traders who are 3 profitable traders with 3 simple strategies, and we will explain you that. So I will start and then it will be to them. And I hope you will enjoy this video. Show us some love because now we took a break and I know the algorithm of YouTube punish you for this and so on. So if you can show us a bit engagement, will be amazing. We have a Discord. You have everything in the description. If you want to be on the wait list also for the program that I'm not sure that I will do again, but in case. But in any way, like if you just want to join the Discord, follow my trades. It's for free. I do the live calls and my trade journals. You have the journal of Michael and Dave. And also if you want to be updated about the episode that we have. So I just had a blank page and I will explain you how my charts kind of look. So first of all, what's very important for me is to have the session breaks. Session breaks tells me when the new day come. Okay. My strategy is even simpler than the pullback strategy. And I will show you this strategy now because I had a aha moment and it is something I will use over the next years for sure, and the only disclaimer I want to give you here is that if you start to trade it right now, because Pablo said so and it looks great, you're stupid. I'm sorry to say, you're stupid. You need to document and you need to really document and backtest heavily. I have tons of documentation. You can ask the one who are doing the program with me. It's quite a bit. I make them work their own strategy. They have to have quite a lot of documentation. And backtest needs to be heavy for you to understand what's happening. Okay? Your brain needs to understand what's happening. Otherwise, you're just gambling or guessing. So first of all, I always take the low to the high of yesterday as my base. And I trace a Fibonacci, which is not a Fibonacci because we don't have a Fibonacci number, but I use the Fibonacci tool that you have on TradingView, and I use this grid. So I use quarters, daily quarters, 0, 0.5, 0.25, 0.75, 1, and then 1.25, 1.50, and so on. knowing that I put another color on the 0.5 has something quite important. Why? Is because the 0.5 tends to be either a zone of rejection or either a zone of magnet for potential target. So this is today, and I have also a small trading session. So I will show this to you here. I use the thing called trading session, and I'm using only the London session. And if you know me from the past, you will see that this is not, I suppose this one, it's not on this. The first session is Asia. Whatever, we could do that. So I think, I don't remember which time it is. It says 9 and here it's 2, okay? So 10 would be 3, okay? So it must be exchange hours, right? So I use my trading session from 9:45 UTC plus 2 to 10:15. I have only 30 minutes of session. It's very important, okay? Because you don't want to overtrade. What am I looking at this grid? And why do I use a daily quarter grid? Well, trading is numbers, right? And there is always an importance on round numbers. For example, you can see it on Forex. And it does happen pretty well on every chart. But what I wanted, it was to take a small risk reward. As you know, I love small risk reward. So I'm looking for 1-to-1, but potentially on some days, capitalize on trend days. So the only goal I need for myself is to guess the trend of the day and try to capitalize on that. So that's why I start with a grid and start to quickly analyze only on the 1 hour time frame. I'm not going lower. What could be the trend? I use two things that could help me, at least on my daily bias, that can allow me to not spend too much time on daily time frame. It's the here, multi-time frame exponential moving average. And I use it 2 times, okay? So the first time I use the 20 only, okay, for the resolution of 4 hours, okay, and I'll put it on purple. The second one, I will put it on yellow or orange, yeah, and I use the 20 again, and on a resolution of 1 day. So I use the 20 EMA of 1 day, 20 EMA of a 4 hour. Why? It's because they give me enough information of the bias without me really have to spend time on it. It tends to reject really nicely the daily 20 EMA, which happened here, but it also is also consolidating on the daily 20 EMA. And for example, here. So my session, you see that is at 9:40, so 45, you see here. I had consolidation around the daily 20 EMA. I didn't have a clear vision of where we will go. Then it's a no trade day, okay? And the 4 hour is to confirm me once we are in a trend, so when price goes away from the daily EMA, that we have rejection. So usually if we arrive to this EMA, I tend to avoid to maybe short at this area if it will be. I will wait to see if there is a rejection. But to confirm me, so for example, if we did support or resist this area, I'm very happy to take a trade. So here, for example, price did consolidate, reject, and then consolidate on the 4 hour. For me, when the price of the 2 AMA are quite close and are making like a bend, I'm trying to be as careful as possible. I will try to maybe take 1 trade max. One thing you need to know is that through my documentation, I noticed that after 2 grids, so 1-2 grids movement, there is a high chance, almost 50% chance that it rejects. So what I need to look at before I'm taking a trade is to know how many grids we did for the day. If we did 1 or 2, if we did 2 or 3, we need to be sure that I will potentially take a rejection. If we didn't touch or in neither support or resist the 0.5, then the 0.5 is a magnet. So for me, right now, potentially, it's still not my time of trading. I still need to wait 50 minutes close of this candle. I will see where we pass. If we go through, for example, the 0.5 without any rejection, I might expect to touch maybe this grid. So I could make an order here as a short, like so. Sorry, to be more exact, my short order will be here with a TP here and my stop loss here. And I look for 1-to-1. Knowing that we will have 1 grid, 2 grid, I will potentially take a trade here on rejection because we have a daily EMA. But here is not an amazing example just because my EMA are quite close to each other. So yeah, I did backtest this quite a lot. Again, you can't, and it requires intuition. I'm trying to make it as mechanical as I can, but I know that with my experience, there is a lot of intuition coming in place, and please be careful of that. If you see about this, for example, we had a go down, so this is the day after, okay, 7, 8, 9. And then what happened is that we rejected 0.5. So you see it becomes a magnet, but then it's a price of range. And that's where you have to be very careful of this zone. So if you are above or below quite far, you can, and that it hasn't been supported or resisted for the day, you can go and target it. Otherwise, when it price plays around it, wait for it to either break out towards the zone of 0.25, 0.5, 0.75, or play the range, meaning that you will take an order entry here, stop here to target 0.5, or entry here, stop here, entry to and then TP to 0.5. If you catch a trend, so for example here we see, so I will just move and then I think I'm done with explaining my strategy. Here this is the day high and low, and then price you see just continue towards. So sometimes it goes more grid. Again, it's my documentation that shows that there is, I think it's 46% of the time, 2 grids, 1 rejection. Then maybe 17% of the time it's 3 grids. I don't remember exactly the numbers, but it's something like that. So at 9, you see we were quite bullish. We didn't touch yet this zone, so it could have been a zone of taking the trade here, but you see it would not have touched and then it will have reject. But what happens here is that once you catch a trend, so for example, consolidation, rejection of EMA, and you are available at that moment, you can take a trade, okay? Going up, so stop 1-to-1. And what will happen is that if I'm sure with my trend and that we maybe broke out a resistance or a support, I will take and put already an order on the TP I have to entry here, to stop here for another 1-to-1 until I feel like it. So that's the problem, maybe for you who listen, is that there is a lot of intuition to get here. And the best way to actually find this strategy useful for you will be by documenting. It's a very easy strategy. So far on my backtesting, I'm now live trading for a few times, but it has been doing very well so far, but it's still beginning, so we need to be realistic. Backtesting is around 90%, and so far I can't give you numbers enough for my live trading, because I find it a bit stupid that I give you, okay, for this last month I did this much, but last September I did 9.2%, now it starts on right, but it's not relevant. I'm just telling you the strategy I'm focusing on. If you want to see more about it, I did 3 live stream and I will do some live stream later on YouTube. You can see also the Discord where I live trade. You can see what will be the calls and have an idea. But otherwise, if you are inspired by this, feel free to add Confluence, take off Confluence, but do it your own. Don't try to do exactly like me. Anyway, that's it for me. 15 minutes, a bit longer than I expected, but I hope this was helpful, and I will let voice to Michael and Dave for their part. I'll see you on the next video, and thank you for listening.
Hi everybody, my name is Michael and I'm a full-time trader at True Traders together with Pablo and Dave. Today I will go through the strategies I use, the tools I have in my toolbox for my day trading. And let's dive right into my chart. So I use different strategies, different way of trading during the day, depending on what the charts and the price actions are giving me. So I use support and resistance levels, and they are visual support and resistance levels, which means that I don't draw them after order blocks, wicks, or anything else. I just look at where the price previously has been rejected from. So I expect the price reject from there again in the future. I also use RSI divergence. RSI divergence is, for example, when the price is making lower lows and the RSI is making higher highs, or at the top when the price is making higher highs and the RSI is making lower lows. My next strategy or my next tool I use is double tops and double bottoms. We can see, for example, here there's a double bottom, which means when the price is reacting from a previous support area, but at the same price range. Then I use momentum. That means if, for example, the price has hit my support level and I see there is a momentum up, then I long it. If it hits my resistance level and I see there's momentum down, I short it. And then I use pullbacks. Pullbacks, if the price goes up and then goes back and retest a level before the area where it started to go up, that's a pullback, and I also trade that. I will now go through some setups from Friday where I use all the different tools. And let's start with this one here. This here is a breakout of trendline that started with, you can see here, started at the bottom, price is going up, following the trend line. I had my trend line from this to this week, and when it broke the trend line, I let the red candle play out, waited for the pullback, and then longed it the way down. I originally had my TP down here, but I moved it a bit up. So you can see this here is a fairly simple trade. Follow the trend line, wait for the breakout, and the breakout, for it to be a confirmed breakout, the price has to break market structure right here. It broke the market structure here, went up for a pullback, and then back down. That was a breakout for trend line. So let's try another strategy. I'll remove this one here again. Let's see what else we have. Here, yeah, that's a bullish divergence I used here. I'll make this arrow here a little bit smaller. So, as you can see, here I have the red box is my support area. Price is first rejecting here, rejecting the second time, making lower low, also rejecting around my trend line. In the same time, RSI here, you can see it's making higher lows. So there is bullish divergence. And I had the price to make a little reaction, and I longed here. And my TP was at the resistance level. So that is how I use, an example how I use bullish divergence. So let's see else what we have during the day. Yeah, here. This here is more a momentum trade. You can see here price is reacting from the trend line I have here, plus it also wicks down on my support. And this here, I remember it moved very fast up. So when you came above this trend line here, I entered along, and you can see it rolled all the way up to the same resistance area that I have used previously. So let's see the next trades. Yes. Here I use double bottom. You can see here I have a support level from when price rejected here. Price went up and then down and rejected one more time and made a double bottom from this bottom to this bottom. I took a trend line here and I waited when the trend line was broken and then I longed. As you can see here, I used two different tools, break of trend line and the double bottom. Here's another example of bullish divergence. This is a little bit so you can see. See, here's a wick down. Here the price, that was where I longed for the double bottom. Price went up and then down again, made a wick down through support and the trend line, and then made a lower low from this level. But in the same time, it didn't make a lower low on the RSI, but made a higher low. So when the price retraced, it went pretty fast. And on the way up, I longed, and rode it up. Most of my trades are not so long. I don't aim for 5, 10, 20 RNRs. I play the safer game, you can say. So you can. There was a good chance that this top here would be broken and continue up because of the reaction down here. But I prefer to, just take the profit I can get in smaller but several trades. But again, this here was an example of bullish divergence and momentum as well on the RSI. Here was an example for bullish divergence and break of trend line. I have trend line up here. And for example, here I didn't long because there was a slightly bullish divergence. But again, the price action itself, I didn't like it. So I waited until the price came down here, made a very significant lower low, while the RSI made higher high, and in that case made a bullish divergence. I didn't long immediately. I waited for the candle close outside the trend line and then longed here. Again, I wasn't greedy. I would have my TP below this week here. So I prefer to take my profit, close a trade, and wait for next possibility. This here was a very fast overview of my trading tools, strategies I use. In the future, I will make some more detailed videos where I explain the price action and the market structure condition when I enter my trades using the different tools. But for now, thanks for listening, and I'll see you next time.
Hey guys, I'm actually in the middle of my trading session, so I figured while I'm waiting for a setup to turn up, I'd talk a bit about my strategy and what I look for. So at the moment, the market on the 5 minute look like it's in a bit of a consolidation. So just to show you what I'm looking at. So as you can see, I even took a loss earlier. I show all my flaws and I have nothing to hide here, but at the moment it's kind of consolidating slightly above a support area. But anyway, I will show you what I look for when I turn up to the chart. The first thing I do is I go on a daily, and the very first thing I do is I draw my fib, which is this one, on yesterday's or the day before, whichever it is. It could be a Friday if it's a Monday, from the bottom of the day to the top of the day is in the week. So if you want, I'll draw it again just so you can see, get my fib. Now my fib is different type of fib, not your standard. It's actually one that Pablo introduced me to. Basically it's in quarters. So as you can see, we have 75%, 0.5 and 0.25. And they just kind of represent interesting areas where usually a move kind of happens. And if you go through past charts, you'll find that when you go, say, drop down to the 1 hour after you've drawn your fib, it seems to be like areas like around these lines that act as interesting areas that you can potentially make a move, whether it's be long or short, depending on what your bias is, right? So another thing I do on the daily is I also have a look at what's happened. So you can see on the daily, we did hit some support around here. But we have been bearish, right? The last how many days? Quite a few. So 1, 2, 3, 4, 5, 6 days. And then we had one start of a pullback at support, and it's making its way up. The thing is, because it's been really bearish, I decided to draw a line here, which is support and resistance. Now, support and resistance is very key in my strategy. It's the first thing I look at, especially on higher time frames. And what I'm looking for is when there's an area of, say, support, which was this one, and then you see a move that breaks that support, which it did here, then this support that was previous, this area that was support is now lost and it's resistance gained. So what once was support becomes resistance because this move broke this whole trend up. So when you look at it from trends, this is one move up on the daily, and this is one move down. Okay. So as you can see, this line broke this because it broke the support here. So the minute that happens, you create essentially a level. Okay. And it's an area of support and resistance that interests me. Now, support and resistance, when I look at that, the higher the time frame, the more weight I give that support and resistance. So for instance, as you can see, this is a daily resistance level. This is more important to me than a 1 hour, say, support level or resistance level. That's kind of the way I view it because it's stronger. It's going to have a lot more weight when it comes to any price rejection that may happen. So once I've drawn that, I've got my support and resistance area. I've got this bit here, which is my my resistance for the day. Yes, we do have support here, you could say, which is exactly where it rejected and started to make the pullback. But because we're in a downtrend, I'm going to give more weight to the downtrend. Having said that, you might argue that we've been in an uptrend all this time. Okay. So it depends on how you view it. Okay. But for me, since I'm trading on the 5 minute, I'm not going to make a move just based on this because obviously it could play around a lot before it actually breaks any of these trends. Okay. It might take a few days before it breaks this resistance or breaks this support, but it's just areas of interest that I need to be wary of. Then I look at the 4 hour and I start to see if there's anything there that may interest me. So as you can see, we've had this big push down. Okay. This is an area of resistance, which is the same as the daily resistance because it's the same blue line. So that is a very interesting area. So the fact that the 4 hour resistance lines up nicely with the daily, that really gives it a lot of weight for me. Same time, in the current move, which is up, we have support at this candle. Now, why do we have that? Because again, let me just draw this. This went up, then it went, I don't know if you can see these. I'm sorry if you can't. Then this candle went down, right? It stopped here though. So it didn't break these 3 candles. It went up, then it fell short of support of this area. And then we went up again. We broke this trend down. So therefore we created this level. So this area of resistance previously, when these 3 candles hit it, has now been broken by this move up. So this now becomes support. Okay, I hope this makes sense. I know a lot of you already know what levels are, but for those of you who don't, this is what I'm looking at. So right now, as you can see, we were in this 1 hour this 4 hour candle. So for me, this here is an area of support because these 3 candles broke that move down. A candle is a trend because in a 4-hour candle, there's like waves. Like if you were to look in this 4-hour candle and drop down to a 1 hour, you'd see this sort of stuff going on, right? And that would make up, say 1, 2, 3, 4 of these is one 4-hour candle. So I'd say that 1, 2, even 3, this here made up that 4-hour candle that we're talking about. Okay, which is correct. As you can see, that 4-hour candle hit that daily high. You look at this 1 hour hit that, then it went down, it stopped at support. Again, this is another support on the 1 hour. So we had this move down, we had all this area of resistance here, along here. Then these candles, 1, 2, 3, 4, broke this whole area. So this area of resistance now became support. So what happened? Came down, one candle, supported that area, which is resistance lost, support gained, and went up again. Okay, so that's basically what I'm looking for. I'm looking at support and resistance, which is levels. They're both kind of the same in that way, right? So again, I've drawn my daily. I have a look at areas that interest me on the daily. I look at the 4 hour. I look at that to see if they kind of act as a confluence. And then I move to the 1 hour. So now we're in the 1 hour, and I'll explain to you why I took that loss today. So what happened here? I turned up my chart, and I think I was around here. I was around here in this hour. And, I drew my daily. As you can see, this is the daily high of yesterday. Now, the daily high and the daily low was the daily level, daily support, area of support and resistance. They act as very strong markers and areas of support and resistance that I need to respect, okay, most of the time, or at least be weary of them, okay? In this case, I decided to respect it and I lost, but in other situations, it has played out right. So what happened was we had this push up after this massive drop down, as you can see, huge drop down. And we started to make a pullback up. Now, in my mind, we're still in a downtrend, okay? So what happened is, as I started seeing this hour candle resist the daily high, this one didn't break it. This one supported, yes, it did. It supported this area, but then this one rejected it and came back down. So when I was in this area and I saw this resistance play out, I moved to the 5 minute and I'll show you what I saw. So this is the 5 minute. As you can see, here's all the resistance. Okay. So what happened was we were kind of in a bit of a range here on the 5. There's a bit of indecision. Okay. This area here. So it was trying to break it, wasn't breaking it. But then again, it really wasn't going down either. It was supporting this area too. So there's indecision between the bulls and the bears as to which direction price was actually going to go. But because of my strategy, I give weight to the daily above these levels, which is the 1 hour. So in my mind, I was like, if it's respecting it and it breaks below this range, I'm going to go short because my overall bias is short. And that's what I was thinking. So what happened was we saw this trend, 1, 2, 3, 4 bearish candles, broke these lows. Okay. And then we had a pullback on the 5, which is here, and it respected the support that was here. And then I had another bearish candle. Now my strategy is that on this situation, because it broke the trend, then pulled back, it respected the support that was lost in my mind at the time, then I was going short, and I did. Unfortunately, I was wrong. The reason why I was wrong, I'll explain to you next, is because at this point when I took the trade, it was 10 minutes before hour close. So if we go back now to the 1 hour, what happened was that hour, which is this bearish one, it ended up closing above support. So although the 5 minute looked like it broke the low, it was actually just a wick on the 1 hour. So what happened was it went down and then back up. So on the 5 minute, we see that drop and that pullback. But on the 1 hour, all it is simply, hey, I'm just closing at support, and big chance we could be long again because we didn't break anything on the 1 hour. And again, the 1 hour is more important than the 5. But I still, chose the daily, which was this high, as my confluence, my reason to go short. And I was wrong, and it went up, and that was it. Now, around the 1 hour, as you can see, I've been waiting. We've broken this. That's where I got stopped. Then we had this hour, pulled back, then went back up. Now, some people might have gone long at this point, somewhere in here, but I thought I'd wait. And now we've had this hour that just closed right now as we're talking at support. So this is a very interesting area. So if I move to the 5 minute, I might even take a trade. Okay. So we have support, which is here, all along here, which is where my previous stop loss was. And look at that, it's moving. All right. So I'm in this video, so I probably should have entered right on close, but it's okay. We'll see. I never like to go right on the opening of the hour candle. So we'll just see, give it another 5 minutes and see what happens. But that's kind of like what I look for. So overall, I just wanted to give you a bit of a look into what I look for in terms of support and resistance on the 1 hour and the 5 minute. I can go into more detail around levels, if you like, but basically that is my strategy. I don't use RSI. I don't even use net EMA. I just look at support and resistance, which is the highs and the lows of the swings. Okay, I look at levels, which is what we just discussed, and I try to look for a setup on the 5 minute that is in confluence with an area in the 1 hour that also supports my decision. So again, this is a 5 minute level, as you can see, supported it, but it also is support on the 1 hour close, which we just saw happen. So that alone is enough of a reason to go for it. Okay. And had I gone on the very first candle, which would have been on the close of this with my 40-point SL, then we'll see what could happen, right? But we're not sure. I will talk about my actual entries, and I'll go over my 5 minute setup in a little bit more detail. Hopefully that it will help you, and maybe you'll get something out of it. I hope so. And I'll talk to you guys on the next video. I hope you enjoyed it.